Okay, all right, so it's being recorded from now. So as we know that this evening session is for exam revision, it's our NSS session for exam revision, so all things exam related can be discussed. So what I'm planning to do is to go through a past paper with you guys, as many questions as we can manage in the time, just to get your minds into the swing of it and to remember how these questions work and show you what your approach should be, and just to kind of get you into the exam mode. Okay. So as always, if anybody has got any questions, you're very welcome to ask them at any stage. No formalities. So you can just put up your hand, electronic hand at the bottom of the screen. And open your microphone and you can go ahead and let me know. Otherwise, if while I'm busy chatting, you can also just type it in the chat, type the question into the chat bar, and then I'll be able to pick it up from there and answer it when I see it. Okay. I don't know about you guys, but it's freezing cold in Port Elizabeth this evening. We had rain again today and the temperatures plummeted, so everybody's freezing. So I'm assuming it's like that. I don't know if any of you guys are in Cape Town or the Western Cape down the Garden Route, because I know it's freezing all down that side as well, where everybody has had all the rains. And I hope anybody that is in the Cape Town area isn't suffering too badly from all the excess rain and the flooding. Oh, Joburg is cold. Jamie, I'm so glad I don't live in Joburg, because I know in winter it gets way colder than it gets here at the coast. So I know we complain. But in PE, when it gets to 12 or 13 degrees, we complain that it's freezing. And in Joburg, it's like you guys are suffering with 6 and 7 degree weather. Okay, so I think that's everybody for the meantime. So let's start. Anybody got any questions that they want to ask at this point? Anything that you've got, any questions that you've got on your minds? Anything to do with the exam or your revision? Remember also, guys, you've got just over a week to your exam. So anytime over this next week, I am available. You must just send your messages or your emails through with any question that you've got while you're revising, and I'll be available to answer it. So don't be shy to ask questions. That asking questions while you're revising is really important. It stops you from worrying about things and it keeps you going. Okay, so even if you don't feel like asking questions now this evening, please remember the emails and messages are always open to questions. That's really our main purpose as tutors, is to be here to support you when you've got questions. Okay, so as you probably can see on the screen already, I'm already sharing my screen with you guys. So I'm going to go over to the PDF file now of the papers that we're going to go over. So this is a 2021 paper that I found that I'm going to use to do the revision, that we're going to go and have a look at. So if you do want to look for this one in the library, I'm hoping it will be the same one that they've got uploaded for 2021, but they don't always have the same papers uploaded. So also, just I know I've had a couple of questions about the papers. So for every exam sitting that we've got, so for instance, now in June, we're doing the exam sitting, there are always at least 3 different versions of every exam paper, because we have the first sitting that everybody writes, and then there's a different paper for the supplementary, and then there's a third paper for the special exam for those people that for some reason missed the first 2 and still need to write. So the version that they upload on the e-library, it could be any one of those 3 papers. So the paper that you found in the online library might not always be the same paper that I go through online, and that's the explanation for it. Okay, so whoops, I don't want to go there. I want to go here. Okay, so then let's begin. So I'm just going to use this paper to give you some hints and tips for the exams, and then we'll go over some of the workings and some of the questions, just so that you can get an idea of what you should be doing. So first things first, you guys have got, this is INAC, so you've got 120 marks. Where's my, okay, you've got 120 marks, and that equals 120 minutes in your paper. So that is the most important thing, bear in mind, is that each mark you must complete in 1 minute. So a 10-mark question, you've only got 10 minutes in which to do that question. Okay, so please remember, you've got to monitor your time. You've got to be so strict with yourself about sticking to 10 minutes if it's a 10-mark question. And if you get to the end of the 10 minutes and you're still a ways from being finished, then just leave that question and leave some space and move on to the next one, so that you are not stealing minutes from your next question, because you only have that fixed amount of minutes. You can't get any of them back. Okay. And then at the end, when you've finished your paper, come back and then look for all those little gaps. If you've got any time left, come back and review those places where you skipped some bits and pieces. And also, just before I forget, the second thing that's just as important is, in this particular paper, I think there were 5 questions. There were 5 questions in this particular paper. So that's probably about average. So in your 15 minutes reading time that you guys get, what you must do is look through all of the questions in the paper, read through them quickly, just to kind of see what each of the questions covers, which part of the work it covers, and what format the question is in. And then you're going to identify, out of those 5 questions, the question that you can do the quickest, the one that you know the best. Usually start with the shorter questions, but only obviously if you know them well, and you know that, for instance, if it's a 20-mark question, you know that you can definitely finish it in, say, 15 minutes, and then you've got that one down because you know that question really well. So it doesn't matter if you do question 5 first, and then you do question 3, and then you do question 2, and then 1, and so on. You can do the questions in whatever order you want to do them in. And it's vital that you take that opportunity to make sure you're doing the questions in the order in which you know them best and you can do them quickest. That is one of the secrets to passing accounting, and not only to passing it, but to doing well in the paper. Okay, so please remember those 2 things. 1 mark equals 1 minute, and do the questions in the order that you know them best. Okay, so Jamie, your question, how much do you need to pass this exam? So that will depend on what your CAS mark is. But obviously the overall pass mark for the module is, the overall pass mark for the module is 50%. And you have to get a sub minimum of 30% for the paper. Oops, sorry, I'm just trying to type this as I'm speaking so that it's there. You have to get a sub minimum of 30% for the paper in order to qualify for the supplementary. If you don't pass the first time around, you are only allowed to write the sub paper if you got at least 30% for the first paper. Okay. If you want me to work out more or less what you need to get for the exam, depending on what your CAS mark is, then just let me know what your CAS is. You can send me a message and then I can work it out for you. But remember, that will just be kind of like an estimate, because I don't have, with the new system, the tutors haven't got access to to your overall marks at the moment. So you just have to would just have to let me know. Okay. Generally, it works out if your CAS mark is around about 50%, then generally that means you've got to get 50% for the paper in order to get your overall 50% mark. If you have got 60% or around about 60% for your CAS, then that means that it usually works out if you get just over 30% for the exam paper, you'll get your overall 50% for the module. Okay. So, but remember, those are also, it's just estimates. It will depend at the end of the day on exactly what your marks were. Okay, so let's have a look at these questions then. So usually with the first question for this module, they do something like a multiple choice or one of those fill in the missing answer type questions, so that it's it kind of gets you into the swing of the papers before they go into those long questions where you've got to do analyses and fill in subsidiary journals, etc. But please remember, you know, these multiple choice questions, for instance, there are 2 marks each, but then that means you've only got 2 minutes to read this, do the calculations, decide what your answer is, and write the answer down in your paper. So these can be very deceptive. They look like they'll be quick because they're multiple choice, but you can end up dithering over one of these and ending up taking 2 or 3 or 4 minutes for one of these questions. So just watch your time very carefully. I'll just take a quick look at these multiple choices, just so that, again, to get you into the swing of remembering what you've got to do. So with these ones, we've got multiple choice, and on your answer book, you've got to write down the number of the question and then just whichever one of these letters you've chosen. So in this particular one, let's see if you guys can do it. Have a look at the question. If the owner's equity of a certain business is equal to 70,000 Rand and the total assets of the business are equal to 120,000 Rand, then what would the total liabilities of the business be? So remember, what are you going to use for this one? You're going to use your, this is just quite simply our accounting equation, which says that assets is equal to owner's equity. Oops, why am I keeping, is equal to owner's equity plus liabilities. So if they've given you owner's equity and they've given you assets, you can then very easily work out that third amount there, and you'll just play around with the equation. So here they want the liabilities. So liabilities is going to equal assets minus owner's equity. So they've given us the assets and they've given us the owner's equity. So 120 minus the 70. And that will give us the answer. Let's see who got that right. Yes, exactly, Jamie. That's perfect. Okay, so do the rest of you see? You see, so what they're actually testing you here is, do you know your accounting equation? That's really what this question is testing. Okay, so this accounting equation is very, very important all the way through accounting. If you carry on with accounting next year as well, the accounting equation is still, it forms the basis of everything that we do in accounting. So what did we say? 120 minus 70. So then that would be A would be our correct answer. And then for the second one, a business that is registered for VAT. So please take notice in all of these questions. You'll see some of the questions, they'll say ignore VAT. Some of them, they will say the business is registered for VAT. And it's very important that you read carefully and exactly what they are telling you about the business before you go ahead and do your calculations. So this one is a business that is registered for VAT, and the vendor buys 2 products that are inclusive of VAT. So the 2 products cost 18 Rand and 55 Rand each. Taking note that those are including VAT amounts. and they want to know what is the total VAT liability that was incurred by the business. So if any of you have picked it up, there is a problem with the wording of this question, because this would not be a VAT liability if we are purchasing these goods. That would actually be a VAT asset, because the receiver, if we are purchasing the goods, then the VAT will be input VAT, which means that the receiver owes us that money, which means that it's an asset. So this paper had a slight problem in the question, but ultimately what they want to know is what is the VAT from those two amounts, if these are including VAT amounts, and then obviously adding those two VAT amounts together, which total is this? So again, this is showing you guys just how important it is that you are comfortable with doing your VAT calculations, adding VAT onto an excluding VAT amount and working out the VAT amount from an including VAT amount. So remember, with your VAT, it's just very easy. The excluding VAT is always the 100%, and then onto that we add an extra 15% VAT, so that our including VAT amount is then always 115. So here they've told us these are including VAT. So our 18 Rand, let me just see if I'm going to fit this in. Our 18 Rand and our 55 Rand are including VAT amounts, which means that they are 115 parts. We want to know how much 15 parts of the 115, how much that is, okay? So we want to know 15 over 115. So we take 15 over 115 times 18 Rand, and we take 15 over 115 times 55 Rand, and that will give you the two individual VAT amounts. And then if you add those together, you'll see they add up to 9 Rand 52. Okay. Still in the last assignment that I marked, the students are still really battling with the VAT calculations and the cost of sales calculations. They are super easy, guys. You must just tell yourself that they are easy. You do know how to do this. This is simple maths that you guys learnt in junior school when you learned percentages and adding on it. There's nothing difficult. Students just somehow seem to get a bit of a mental block, and they think that there's some funny trick to that when there really isn't at all. You must just always write it down like this. Always write down 100 plus 15 equals 115. And then whatever amount that they've given you, write it down under the correct column. And then you'll quickly be able to see what your maths is to calculate the missing amount. But again, the only way you're going to do that is if you practice with a piece of paper and just write on your piece of paper at home all kinds of different VAT calculations, excluding VAT, VAT, including VAT, and then keep working them out backwards and forwards until you are comfortable doing it and you've worked out a method that you can remember easily when you are sitting in the exams. Because remember, there's a few different ways that you can do the calculation. It all depends on which one you prefer and which one you're going to remember the best. Okay. And then this one is 3 accounts of a business have got balances as follows. In our sales accounts, remember that would be our general ledger account that they're talking about here. When they say 3 accounts, this is our general ledger account. Sales is 40,000. Sales returns has got a balance of 5,000, and our cost of sales has got a balance of 20,000. So they want us to calculate the gross profit of the business with these amounts given to us. So again, you must remember the very basics of a business's income statement, and that is that sales, and that would be less returns minus cost of sales equals gross profit. And then remember, underneath that in our income statement, we then add all other income and deduct all the expenses for the year, and then we get our net profit at the end of the day. So again, these are the basic structures of your accounting that you've learned, that you must, I hardly even want to say memorize, because this you should really know off by heart now. Sales minus cost of sales equals gross profit. So here we've got sales of 40. So we must subtract the sales returns from the sales, which will give us 35,000 net sales, and 35,000 minus 20,000. That means our answer is then going to be the 15,000. So guys, also when you're busy working with your exams, you must have pens and pencils and different color pencils and highlighters with you as well. And don't be afraid, jot these little things down on your page. Jot these little things down on your page as you are working them out. Don't try and do it all in your head. It makes a massive difference to be able to see on the paper what you're actually thinking. Then this one here, the opening inventory of a business is 25,000 Rand. So that means at the beginning of the year, the inventory balance was 25,000. Then we incurred an expense of carriage on purchases of 5,000 Rand. And then the closing inventory was 7,000. So you should hopefully recognize that this is carriage on purchases, that this is the pattern of the type of accounts that we have with a business that is using the periodic inventory system. And when we calculate cost of sales in the periodic inventory system, what is our calculation? Can anybody remember what is our calculation, our little formula for calculating cost of sales when our business uses the periodic inventory system? At the end of the year, in order to work out cost of sales, because we haven't got an account called cost of sales in our accounts during the year if we're using the periodic inventory system, that cost of sales account is only used all the way through the year in a perpetual inventory system. We do a little calculation. Who can remember what's that calculation to work out cost of sales? Anybody remember? Okay, have a look in the chat box. Calculation is opening inventory, and they have to give you that balance. I mean, you can't work it out. They must give it to you. Plus purchases for the year, plus any other carriage or delivery fees for the year, plus any duties or what's the other thing? Import duties or tariffs, minus the closing inventory figure, and equals the cost of sales for the year. So if we have a look at what we've got in this question, they have said the opening inventory is 25,000. So that's our opening inventory. We've got 5,000 Rand, that's purchases for carriage. And then we've got our closing inventory, minus 7,000. So that's the calculation that we've got to do to calculate our cost of sales. So what have we got there? 25 plus 5 is 30, and 30 minus 7 is 23. So our answer must be D. Yes, that's it. Perfect. Okay, everybody follow in. So you can see in these multiple choice questions, they're really testing you on all of these little, very important formulas and calculations that you need to know in order to be able to do well in your entire paper. Then the next one, we've got a non-VAT vendor. So this means somebody who is not registered for VAT. sells an item that cost 570, so that's its cost price, and the selling price is 1140. So the 570 is the cost, and the 1140 is the selling price. So the sales transaction causes owner's equity to increase or decrease by which of these amounts? So again, if we are making a sale, if we are selling goods, the profit on the sale increases owner's equity. So in this particular sale, you have to work out what is the profit, and then that's the amount by which owner's equity will increase. So in order to work out the profit, we take the sales amount minus the cost of sales, just as we've done above, and then that equals the profit of, and in this case it's 570. So that is our correct answer. Sales minus cost of sales equals GP, profit. Okay, and in that one we a non-VAT vendor, so we ignored VAT. We didn't have to calculate VAT at any point in that question. Okay, any questions there? Everybody followed those? So hopefully that's warmed your brains up a little bit and reminded you of what you've got to practice. Okay, all right, so let's have a look at question 2. So this is a 20-mark question. So I know I am going to keep reminding you guys of this. This means that you have got 20 minutes to do this question in and not 1 minute more. So just grab my water. The following are transactions for the company for March. You will take a highlighter with you to the exam, and when you are reading your questions, you will highlight these important things. Just like I'm highlighting on the question paper now, you guys must do the same. Take a red pen and a highlighter and some other colors and highlight, underline, circle, whatever you need to do to make sure that when you look at the question, all those important parts stand out to you. The business uses the perpetual inventory method, that's important, and a markup on cost of 30%. So the moment you see this markup on cost of 30%, you are going to write down on your question paper immediately 100% of cost, because we are going to mark up on cost, plus 30% cost equals 130% is then going to be the selling price. Okay. If they say 30% on cost, then our cost will always be 100. If the question said the markup is 30% on selling, then your sales would then have been the 100. Okay, but I won't confuse you. We'll get to, I'm sure there'll be an example like that further on. So we've got 30% on cost. So draw your arrow like that, because you are telling yourself its markup is 30% on cost, which is 30 over 100. 30 over cost, which is 100. On the 5th of January, the owner took stock for personal use, and the selling price of the stock was 2,000. So where we've got a transaction where the owner where the owner has got a transaction with the business, whether the owner is giving goods or money to the business or taking goods or money from the business, that is then we then use the proprietary accounts, because that's a transaction between the owner and the business, which means that we will be dealing with either the capital or the drawings account when the owner is involved. When the owner is taking goods or money, then we are using which account? Which of the proprietary accounts do we use when the owner is taking either goods or money? The proprietary accounts, we've got two. It's either capital or drawings. So which one of those two do we use when it's the owner taking goods or money? Who can remember? Yes, exactly. Perfect. You guys are all been studying. Okay, so that's the first thing to remember. So immediately you're going to personal use. The owner took goods. So we know immediately then that drawings is the account name involved. Now, the rule is that when the owner takes goods, the owner is charged, in inverted commas, the cost price, because we have to take the cost of those goods out of inventory. We have to debit the drawings account and we have to credit the inventory account in order to take those goods that the owner has taken out of inventory and off home with him. We debit drawings to charge the owner's account, and we credit inventory to take the inventory out of our stock. Now, we know that inventory is always carried at cost. Yeah, our inventory account is inventory at cost. So if we've got a credit inventory, it has to be at cost price. So we then have to take this 2,000 Rand, which is the selling price, and we've got to work out what the cost price is so that we can then debit drawings and credit inventory with the cost price. So here's our percentages here. So we have got, oops, let me see if I can fit it. 2,000 Rand, they've told us, is the sale. So that goes under the 130 column. We want to know what the cost is, which is the 100%. So we want 100 of the 130, which is the sales amount. So our calculation will be 2,000 Rand times 100 over 130. Oopsie, sorry. I'm just trying to do this quickly here. I just want to see, they didn't tell us in this question whether we must round our amounts or not. So that would be 1538.46 would be the cost price. Okay, everybody follow that. So you must just see, you just write down the simple sum from what they give you in the question, and then take whatever amount they've given you and put it under the correct column, and then say, okay, what have they asked me to work out? I have to work out the cost, which is this one here. And what I've got is this one over here. So I want 100 over 130 will then give me the cost price. And you can always check yourself if you're right, because remember, the selling price is always going to be more than the cost price, because the selling price has got the profit added in, and the cost price is the price of the goods before we've added the profit onto the cost of the goods. So always just check yourself, did I get an amount that was smaller than the amount, the sales amount that I started out with? And that will also help you to check that you're on the right track. And then in the second one, we've got credit sales. So this is actual sales. So this first one was an owner's transaction. The second one, the business actually sold inventory. And this one, the selling price is 20,000 Rand. So again, we're going to record the sale. And because the business is using the perpetual inventory system, we are also going to record the cost of sales. Just get rid of that. We are also going to record the cost of sales entry as well. So remember, whenever we've got the perpetual inventory system and we sell goods, there are two journal entries that we've got to do. The first one is we record the actual sale at the selling price. And the second journal entry is we must take the inventory out of inventory and debit cost of sales. So they've given us the selling price, so we have to work out the cost again. So exactly the same calculation that we did here. We've got the selling price and we want the cost. So it's going to be 20,000 times 100 over 130. She's 1538462. And then the last one, a debtor. So a debtor means somebody that we sold goods to on credit, returned some of the goods that they purchased from the business, and the selling price was 6,000 Rand. So they've returned actual inventory to us that we originally sold to them for 6,000 Rand. So this means we've got to give them a credit note for 6,000 Rand, right? Because we've got to do the exact, whatever we did when we sold them the goods, we've got to do the exact opposite. So when we sold them the goods, we would have credited sales and debited trade debtors. And now because they are returning the goods, we're going to credit trade debtors and debit sales to reverse the sale. And because they've physically returned the goods, and they've told us here they've actually physically returned the goods, we also have to put that inventory back into our warehouse, which means we're now going to debit inventory and credit cost of sales to reverse that original entry. So again, we've got the selling price. We want to know what the cost of that sales was so that we can put the inventory back into our warehouse. So that should be 4615.38. Okay. So those are all of our calculations. I've taken time over these calculations because I know you guys battle with them, and I want to just do a bit of practice. So that, and remember, this is the way I do it. It's the way I write it down so that I know I remember and I've got the right percentages. You might prefer a slightly different way of presenting it, and it doesn't matter if it's different as long as you've practiced it, you know that it gets you the right answer, and you've practiced it and you remember it on the day. So what they wanted us to do was show how the above transactions will affect the accounting equation. Okay, so we want to, how they will affect the accounting equation. And then there's an and also how the accounts in the general ledger will be affected. So what they're asking us here is, how will the accounts affect the accounting equation? That means the Rand value, what will be pluses and what will be minuses in terms of Rand value under the accounting equation, under the assets and the owner's equity and the liabilities columns. And How will the general ledger be affected? What they want there is which account will be debited and which account will be credited with each of these transactions. So always have a look at the example when they give you one, and make sure, go and double check once you've started writing in your answer book that your answer looks exactly like they gave you in the example. So here we received a capital contribution, so that's another owner's transaction of 100,000 Rand in the form of cash. Those are all the important things. So date over there, we just write the date in. So if we received goods in the form of cash, that means that money is going to go into our bank account. And if the transaction is between the business and the owner, then it either has to be involve the capital or the drawings account. And because this is a contribution, it will involve the owner's capital account. So there we've worked out the two accounts. And we know that because bank is an asset, it will increase on the debit side. So we're going to debit bank. And we know that owner's equity or capital increases on the credit side. So we're going to credit capital. And remember, you're also going to write down on your exam question paper somewhere when you've got to remember this, dead click. Assets over there increase on the debit side. Capital over here increases on the credit side. And with the capital contribution, there's never VAT involved in that. It's just a pure cash transaction between the business and the owner. So it's 100,000 increasing in the assets, and it's 100,000 increasing on the owner's equity. Okay, so that's the format that they want us to do. So let's go and have a look at these three transactions that we did in the answer book and see what that looks like. So remember, the first one was the owner took goods for his own personal use. They gave us the selling price and we had to work out the cost price. So we want, here's the amount. So we are going to, the owner took the goods, which means we are going to, inventory is decreasing, and inventory is an asset, and assets decrease on the credit side. We have to debit drawings because it was the owner that took the goods. So it is one of the owner's accounts. And remember, with our oh, sorry, I'm trying to click here. And remember, with our dead click, drawings is over here on the debit side, on the left-hand side. Drawings increases on the left-hand side, so drawings must get a debit. Okay. And drawings are increasing because what we are working out is the amount of drawings that the owner took during the year has increased because he took inventory. And then this is the calculation that we did already. They've done a different math. They said 2,000 divided by 1.3. And what I did on the other side was 2,000 times 100 over 130. Either one of those will get you to that same answer. And please remember, you absolutely must put the plus or the minus in front of the amount because they've asked you show the effect on the accounting equation. And the effect means is the asset increasing or decreasing, is owner's equity increasing or decreasing. So the only way we can indicate that is by putting the plus or minus in front of the amount. And what is the effect on the general ledger? We then have to say which account is getting the credit and which account is getting the debit. So we've put inventory under the assets column because inventory is an asset. And we've put drawings under the owner's equity column because drawings is one of the owner's equity general ledger account. So remember, your owner's equity accounts here will be income minus expenses, and it will be capital minus drawings. Those 4 accounts make up our owner's equity. And then our second transaction, just go back here so you can remember, this was a credit sale. We sold goods worth for 20,000 Rand at selling price, and we have to record the sale and the cost of sale. So 2 entries. So number 1, this is the sales transaction, and number 2, this is the cost of sales transaction. Okay. So for the sales transaction, assets is increasing by 20,000 and owner's equity is increasing by 20,000 because we are going to debit the debtor's control because we sold the goods on credit, and we are going to credit the sales account. So go back to dead click, income accounts. Over here, income accounts increase owner's equity. So credit sales, increase in owner's equity. And over here with dead click, income accounts increase on the credit side. So you must credit sales. Okay. Income increases on the credit side, so credit sales, and income increases owner's equity, so it's plus 20,000. Debtors control or trade debtors is an asset account. So assets increase on the debit side, and so our assets are also going to increase by 20,000. And then here's our cost of sales entry. Our asset inventory is decreasing by the cost of sales amount, and our owner's equity is decreasing by the cost of sales amount. So the account cost of sales is an expense. So we can see expenses decrease owner's equity. And on our dead click, expenses increase on the debit side. So we're going to debit cost of sales here under the owner's equity column. And we are going to credit trading inventory here under the asset column. Because remember, assets, which inventory is an asset, increases on the debit side, so they will therefore decrease on the credit side. So this is your entry number 1 for the sale, and this is our entry number 2 for the cost of the sale. Okay, so this is the sale, and this is the cost of sale. Both of those entries have to be there when we sell goods and we are using the perpetual inventory system. Then our third transaction is a debtor, somebody we sold to on credit, returned goods, selling price of 6,000. So again, here's the amount that we are going to give them a credit note for, 6,000 Rand, and here's the amount that we are going to reverse out of cost of sales. So in this one over here, we're also going to have 2 entries. Entry number 1 for the credit, and this goes down to the next page. Entry number 2 for the cost of sale. So this over here is going to be the credit, and this over here is going to be the cost of sale reversal. Okay, and the reason why we've got to do this, remember, is because this customer physically returned the goods to us, which means they brought them back to our business and we put those goods back into stock. So at selling price, we are going to credit debtors control and debit sales returns. And at cost price, we're going to debit inventory because we're now increasing our asset inventory, and we're going to credit cost of sales. So remember always where you've got your accounting equation at the top, that after you've written down whatever you're doing for each of these entries, you must still check that the left-hand side of the equation equals the right-hand side of the equation. So that if we've minused 1,500 from the left-hand side, we've also minused 1,500 from the right-hand side. If I've added 20 to the left, I must add 20 to the right, and so on and so forth. Okay. Any questions on this, on these transactions here? That's question number 2. Everybody good so far? Okay, everybody following, no questions. And remember, this is recorded, so you can come back if there's something you're not 100% sure of. You can come back, you can listen to it again. You can stop the video and you can check out the calculation and then practice it yourself to make sure that you've got it. Okay. Very happy with everybody so far? Good. Let me just have a look at, okay, so this next question is for 55 marks. So we won't have the chance to finish the whole question now this evening. I'm actually wondering whether I shouldn't just record that separately for you guys. But let's just have a look at the question in the meantime. I won't finish the whole question now because it's going to take too long. We're already just about at an hour, and I don't like to do longer than about an hour and a half for a session, because I know you guys can't concentrate, and the same thing with listening to videos. But just let's have a look at how far we can get and have a look and see what the question was, so you get an idea of what type of questions you could be asked. So again, we've got various transactions from a company for the month of April. Okay, very important, highlight, the VAT rate is 15%. So this means we are registered for VAT because they're telling us VAT rate. The business marks all their goods up at a constant markup of 50%. Whoops, 50% on cost. Okay. So again, the markup is 50%. And the markup is 50% on cost. So immediately we know that cost must then be the 100. Our markup is 50, and we're going to add that to our cost, which means that our selling price is going to be represented by 150 parts. Okay. Markup 50% on cost. So whatever the markup is on is the 100%. If it was 50% on selling, then selling would be 100. I'll just show you what that would have looked like. If it was 50%, if the markup was 50% on selling, selling would be 100, would be your selling price. The profit would be 50%, profit or markup would be 50%, and that would leave 50% the cost. 50 cost plus 50 profit equals 100 selling price. That's what it would look like if the 50% was a markup on selling. Then the profit would be 50% of the selling price would be profit. And whatever is left over, the rest of the selling price is then the cost. So 100 minus 50 profit, the rest of the selling price is then the cost. Okay, so here we've got 50% on cost. So the cost is 100. We have to add the profit to the cost to get the selling price. Here we've got our basic calculation that we're going to use. The VAT works in exactly the same way. Excluding VAT is always 100. We add VAT to that, which is always 15%, and that gives us our including VAT, which is 115%. So in this way, we are always adding VAT onto, it's 15% of the excluding VAT amount. Okay, VAT is 15% of the excluding VAT amount. So it's exactly as if this was a selling price. So the including VAT is just like saying, if I take a markup on top of cost, I get my selling price. Here I'm adding VAT to my excluding VAT amount, and that gives me my including VAT amount. It's the same, the maths is the same. So here we've got a whole long list of transactions. So what I want to show you in this question, which I will do with you now before we finish up, is that here's a whole bunch. You see lots of different transactions, a whole long list of them. So, and they're all from the 1st of the month all the way through to the 30th of April. Sorry, I thought it was April. Did they say April at the top? They said April at the top over there. And here they say February, but that would obviously be what they told us at the top there was April. Bit of a typo. I thought so, April 2019. Very bad. So this is actually April 2019, okay? It's just a typo in the question paper. So what they want you to do is prepare the following journals. So these are now your subsidiary journals, your books of origin, the original books in which we record source documents. So remember your bookkeeping cycle, very, very, very important. You must know that bookkeeping cycle and the various steps in it. So the first step in the bookkeeping cycle is that a transaction takes place. We record the transaction on a source document. We record the source document in one of our, what we call subsidiary journals, which is our cash book receipts, cash book payments, petty cash, debtors journal, DAJ, credit, etc. Okay, those are your subsidiary journals. We record them in the subsidiary journals. Then when the subsidiary journals are finished, we total them up at the end of the month, and then we post the journal totals to the general ledger accounts. Okay. Then when we've posted them, we balance the general ledger accounts so that we know what the closing balances are in each of the accounts. And then we produce our trial balance, which is a list of the totals of all of the general ledger accounts. And that's as far as you guys basically go. If you carry on with accounting, we then also use the trial balance to produce the financial statements. Okay. So what we are doing here, they've asked you to prepare the journal. So we've got a transaction, which they've listed here. They've given us the source document number here. And they've asked us to complete the subsidiary journals. Always make clear in the bookkeeping cycle what the question has asked you to do, because this is one of the common errors that students make. They end up thinking they've been asked for a different step in the cycle, and then they go ahead and then do that instead of answering the question. So we want the cash book receipts, they want the cash book payments, and they want the petty cash journal. All three of those. So 26 marks, cash book receipts, 15 marks for the payments, and 14 marks for the petty cash journal. So this is a long question. So again, remember, just decide right at the beginning of the paper which of these questions you want to do first, and remember that you're going to stick to that time limit. So this question is 55 marks, and that means you've got 55 minutes on the clock to finish this question. So the first thing that you're going to do when you see this here is you're going to come down, look at the required, see which journals they want, and then you are immediately, before you go and fill anything in, you're going to go through your transactions, and you are going to write down next to each transaction which journal each of these transactions belongs in, so that when you then go to your actual journals to fill them in, you don't have to keep reading through that long list of transactions. You've already highlighted which are my cash book receipts, and then you just fill them in one underneath each other. And then the same thing, you already have highlighted which are the cash book payments, and you fill those in. And then the same thing with your petty cash journal, and then you fill those in. That will prevent one of the common errors that students make, is that they enter the transactions into the incorrect journal, and sometimes they even enter some of the transactions into two different journals. So work with a method, make sure that you identify correctly right at the beginning where they belong. Okay, so let's go through this quickly, and let's identify which journal each of these transactions belong in. So our company, the description of the transaction is that our company purchased paint. So you're looking for the, what should we say, the verb. They purchased paint for repairs and maintenance, and they used the petty cash money out of, they took money out of petty cash to pay for that. So straight away we can, let's put this in the under the details column. Straight away we can write petty cash journal, that one. Then the second one, trading inventory was sold. So our verb is sold, and it was sold for cash. So which of our journals will that be in? Which of our journals will we record this transaction in? We sold trading inventory for cash. That will get entered into the it's a transaction. We sold goods for cash. Yes, cash book receipts, because we are receiving the cash that the goods were sold for. So cash book receipts. Then on the 7th, we paid Green Municipality. We paid rates and taxes. Which of our journals will we record that transaction in? We made a payment out of our bank account to the Green Municipality. That's going to be in the cash book payments. Then the next one, Reggie Retailers. We purchased inventory for cash. So we made a purchase, we paid cash. This is cash going out of our bank account. So when cash goes out of our bank account, that transaction is recorded in the cash book payments. And then the next one, we sold goods for cash. So that means that 8,000 Rand will be coming into our cash books, into our bank account. So that will be a cash book receipt. Casual wages. We paid casual worker wages from petty cash. So as soon as you see that petty cash, you know immediately that transaction must go in the petty cash journal. And this one, we received a payment for services rendered. So somebody paid us money. This 6,000 Rand is going into our bank account. So that must go in the cash book receipts. Then this one here, the owner made a capital contribution. So as soon as we see that contribution in cash, and in this case, it was a cash contribution, we know that that 40,000 is going into our bank account, out of the owner's bank account into the business's bank account, cash book receipts. Then this one here, the business paid rent to the owner of the building. So this 20,000 Rand is coming out of our cash book. So we've got to put that into our cash book payments. Again, over here, we paid the water bill. That will also be cash book payments. This one over here, again, we've got that word paid. We paid for packing material for the warehouse. So we've got another one for cash book payments. So just take note, when they say paid, if they don't mention anything about the petty cash, then we assume that that went through the normal bank account. If it is petty cash, like in this next one over here, we bought staff refreshments and we paid that out of the petty cash. Only if they mention petty cash will we then record that in the petty cash journal. Then on the 29th, the owner, again, we've got the owner, took 500 Rand, so in this case, cash, from petty cash. He used that 500 Rand, 300 of it, he used to purchase refreshments for a staff function, so that's a legitimate business expense. And then the owner kept the change for his personal use. So that 500 Rand is going to be split 300 Rand for refreshments and the 200 Rand change will be drawings. But because it's cash coming out of petty cash, that will be recorded in the petty cash journal. Okay. And then the last one, cash sales, according to the cash register, 27,000 Rand, including VAT. So all the way through the month or day, whatever it was, the business made sales to the value of 27,000 Rand. So that is going to be a cash book receipts. We record our sales, cash sales, into the cash book receipts. And remember what happens if we haven't banked the money, if it's a cash sale and the money's in our cash register, but we haven't banked it yet, then we put that 27,000 Rand into our analysis of receipts column. And then only when we actually bank the money do we then put the 27,000 Rand into the bank column. Okay. So that's your, as soon as you've done that, you see how easy you've made your life, because now all you have to do is, we're going to do the cash book receipts first. So all you have to do now is just quickly run your eye down the side and look for your first CBR transaction. And then you're going to go and enter that into your cash book receipts. Minty Wholesalers is who paid us. Trading inventory was sold for cash. So this is a sale and it's 40,000 Rand. In this particular question, they did not mention perpetual or periodic, but because they have told you what the markup is on cost, The only reason we need to know that is in order to work out our cost of sales. So you will work out the cost of sales. So every time there is a sale, you will also record the amount of the actual sale of 40,000, and then you also need to work out the cost of sale. So our cost of sale will be the 40,000 Rand sales amount multiplied by, remember we want the cost, so what we want is 100 of 150. The sales amount that we've got is 150 and we want the 100. So we want 100 over 150. So where was I? Over here. So it's going to be 40,000 times 100 over 150 to work out the cost value. And then you go to your cash book receipts. And don't forget to fill in all of these. You can see here with the marks they gave, there was a half a mark if the student had filled in correctly the document numbers over here. There was a half a mark if they had correctly recorded the date. And we only put the number of the day in that column, not the full date, because remember at the top of our cash book over here, it would state that this is the cash book. At the top of the cash book of the page, it would say April 2019. So you don't need to repeat that. We only want to know the day in this column. And then in the details, there's a half a mark for correctly recording. And remember what goes here is the source of, I'm just going to call it the funds, the money that we received. Where did the money come from? Who paid you the money? So Minty Wholesalers, Johnson Stores, Plantville, Mr. Fresh. You could also have put, and I would have put in brackets here, the owner, so that I knew that that was a transaction with the owner of the business, because those are always special transactions. And then when it's a cash sale, you could also just have written cash over here as the details, because what we have received is cash, or you could have written underneath their cash sales, or over here they've got the cash register roll, CRR. Any of those would be acceptable. But there are marks allocated for filling in all of the columns correctly. And also please note that because of the nature of these journals, they must be totaled, because these totals are what we post into the general ledger. So sometimes the question will say you don't need to total the journal. If it doesn't say you don't need to total the journal, then you must always total them, because that's a full journal. Document day details all filled in, all of our columns filled in with totals. Okay, and always just remember analysis of receipts. There is no total ever added up for the analysis of receipts column, because the analysis of receipts column is only kind of like a temporary column. Remember, we call this the till, because that's just where we keep the money until we actually go and put the money into the actual bank. And in this case, the money was banked each day that we received the amount. But you must put it into the till first and then into the bank column. And then wherever they say for cash, then that means the business received the cash and then that goes into the till. If the transaction says the money was paid directly into the bank account, then you don't put it into the analysis of receipts column. It only goes into the bank column. But all of these CBRs, owner made cash, that we sold goods for cash, we received the payment for services rendered. So all of those, we assume that the person came into the business premises, gave us the cash or check, and and then we had to bank it. So this first one here, Minty Wholesalers, it is the value of the full amount of the sales that we record. So remember also our analysis of receipts, let me put it over here, column will always include VAT. Your bank column always includes VAT. Then the next column is where we remove the VAT from the inclusive amount, and then all the columns to the right-hand side of that will exclude VAT. So the amount excluding the VAT is the amount that actually belongs to the business itself, because the VAT belongs to SARS. Remember, we're going to have to pay this VAT to SARS. It doesn't belong to the business. So we separate it out and we record the money that belongs to the business in our own sales account or any other account. And the VAT is separated out to show that we owe that money to SARS. Okay, so always remember your main columns, which in this case, because it's a cash book, is the bank column, will include VAT, and everything else to the right-hand side of that excludes VAT. And you can always check to see whether your journal totals balance at the end, because this is your main column, bank. And all of these totals to the left, your sundry amounts, plus the sales, plus the VAT, added together must equal the main column. So this is your accounting equation. The left-hand side, which is your bank column, must equal the right-hand side, which is your output sales and sundry accounts. Okay. And remember, that excludes the cost of sales. The cost of sales always has its own separate column on the right-hand side. It doesn't form part of the main body of the cash book receipts. The cost of sales is going to be a separate journal entry that we are going to do just to record the inventory movement, debit cost of sales and credit inventory. In this particular memo, they've just written the cost of sales kind of in shorthand under the sundry, because they obviously didn't have space for that separate cost of sales column. Okay, so always when you are starting out, before you start to enter your transactions, at the top of your page here, go and write this in, till, including VAT, excluding, so that as you enter your amounts, you remember what goes under which column. So here's our 40,000 sales that they gave us. Here is the excluding VAT amount that we calculated. Remember the markup, here's our calculation here. This is the excluding VAT calculation. So this over here, let me go back here. That's the 115. This is the VAT. And all of these columns on the right-hand side are the excluding VAT. So this is 115%. This 34 is 40,000 multiplied by 100 over 115. Okay. This is 100 of 115. This one is 15 of 115, 15 over 115. So 40,000 multiplied by 15 over 115 will give you that amount, and 40,000 multiplied by 100 over 115 will give you that amount. Okay, so also that is 15 over 115, and remember that this VAT is 15 over 115. It is not 15% of the sales amount. That is 15% of the excluding amount. Okay. 347.82.61 times 15% equals 5217.39. And if I take the 34782 plus the 5217, that equals the 40,000. But if I've got the including VAT amount and I want to know how much the VAT is, it's 40,000 multiplied by 15 over 115. Okay. So also just remember, when you're calculating VAT, are you calculating VAT from an including VAT amount, or are you calculating VAT of an excluding VAT amount? It's two different calculations. Okay, guys, I'm going to stop this. I'm going to stop the recording here because we've covered quite a lot, and I see we've got to almost an hour and a half. What I will do is I will try and record the rest of this paper for you, and then also post it up as a recording, so that you can also see the rest of it and the rest of these calculations. And I will continue with each of them, showing you in detail the calculations, the markup calculations, the VAT calculations, the cost of sales calculations, because those are the things that the students are making mistakes with. But remember, guys, it's just practice. You just have to keep practicing with those calculations until it flows and it comes easy to you. Okie dokie. So you guys have been very good and very patient. So I hope this has been very helpful for you in terms of your revision. And that it's going to help you. And then remember, let me have whatever questions that you've got as we go along over this next week while you guys are busy doing your studying. It's a pleasure, guys. It's a pleasure. And I will chat to you soon, and I'll post this recording for you tomorrow, and then I'll chat to you again soon. I look forward to your questions. Okay. All right, guys. See you again soon. Chat soon, and good luck for the exams. Bye, guys.